do is give you, since you've done now a whole semester of AIS research, right? I just want to give you a sort of overview of where this fits in to accounting research in general, and then go over some papers and talk about what lessons you can draw from it. Okay, so I know some of you were in my that boot camp that I gave last semester, right, where we went over the whole area of accounting research. And it's worth asking where AIS fits into this realm of research. And as you probably figured out by now, or if you recall from that boot camp, right, research is dictated by two factors, right? One is the subject area, okay, and the other is the methodology. Okay, so for example, the subject area could be financial disclosures, okay, and the methodology could be some sort of regression analysis, right? And that when you combine the two, okay, you end up with capital market research. Okay, right? And because research is now very, very specialized, right? Most people specialize in a combination of these, right? They would decide what area they want to be in and what methodology they would do, all right? So for example, when I did my dissertation, my subject area was management accounting and the methodology was analytics, all right? Modeling, okay? If you look at someone like, say, Helen, right? Her area is auditing, her methodology is experiments. Okay, and so in your PhD program, eventually you will focus upon a subject area of particular interest to you, right? And decide which tools you're going to learn, right? Because it takes a long time to learn all these tools, right? It's very, very difficult for someone to, cross these boundaries, all right? To be multiple subject areas or use multiple methodologies, all right? If you do that, typically it might be with a collaboration with somebody else, all right? So you may decide that you're an empiricist, but you are interested in some experimental work, right? Typically you would work with somebody, a co-author who is an expert on experimental techniques, because this is an art form. It takes years to develop sufficient skills in these methodological areas to do good research. Okay, so no doubt in your various classes, right, many of the classes that you have taken or will take in your program are based upon subject area. All right, so there's financial accounting. You might take several classes in that. All right, and those subject areas may cover multiple methodologies. All right, so if this class is taught by Vicky Jaggi, say, right, it might be, or Divya, right, it would be empiricist, right, it would be on regression analysis and so on. If it's taught by Carolyn Levine, it will be analytic, right, that would be the methodology. All right, Suresh Govindaraj, if he teaches a class, he's teaching a class to you, all right, his methodology is very mathematical, all right, analytic based. Okay, and similarly there are subject areas like auditing, right? So if Niklas teaches the auditing class, clearly he's going to bring a lot of technology related area work. If someone like Helen taught it, obviously it would be a completely different type of class, all right? So, and then there's similarly, once upon a time I used to teach a class in management accounting in the PhD program, though that has now been dropped, all right? And that obviously focused on research in the subject area of management accounting. Okay, and in other schools, there's also classes in tax, right? Tax research. Okay, though that much of that isn't done here because the kind of tax researchers we have, like Jay Solid, does more legal kind of tax research, not the kind of research that is done in accounting. All right, if you recall earlier this year, we had Brian Cloyd come and present a paper, and that was pure, that's what typical accounting research, tax research looks like, so empirical work in the tax domain. All right, so the reason I mention all this is to ask, where does AIS fit into this. Right? Because if you recall, AIS is different from these, because these are subject areas. AIS is not a subject area, all right? Nor is it a methodology. Okay, so what exactly is AIS? All right, well, it's called Accounting Information Systems, right? So the idea is that these information systems or technology in general applied to the field of accounting. All right. Now that is not a subject area. It is closer to being a tool, right? A tool of doing accounting, right? And so that makes it somewhat different from these other subject matters, because these are practice areas. There are people who say, I'm a financial accountant, I'm an auditor or tax accountant or whatever it is, all right? But you know, there isn't a field called accounting information systems, right? Meaning there isn't practitioners who do this, right? They mean practitioners who help apply technology to auditing, right? Or to internal auditing, or to management consulting, or whatever it is, right? But this is somewhat different, right? And so one of the reasons this class was developed is to help, especially people in accounting, to understand what this thing called AIS is. So because again, it is important to understand that it is different in some ways from these more what you might call traditional practice areas, right? Because AIS is a sort of combination of both subject area and methodology, and it's a little bit hard sometimes to distinguish between the two, right? So let's look at some of the things that you have studied in your syllabus and try and put this into perspective. All right, so this class consists of a variety of professors coming and presenting a variety of different topics. Right, so it's that's somewhat different from your other PhD classes. So this, right, and yeah, I don't know how closely you follow this, but anyway, all right. So he starts off by, you know, in a sense, this is a somewhat strange way of starting a class like this, right? Because what he's doing here is he's talking about the literature of AIS. All right, so he's talking here about you know, what's called citation analysis, right, where you go and look at who's published what where. All right, and this is a somewhat smaller and narrow field of research. It takes place in all disciplines in sciences and so on. All right, and Miklos is a sort of expert in that. It's not a large area of research, right? But the aim, I suppose, of putting this here is to show that, you know, there is a role for AIs in the literature, right? And there's various papers like this that discuss, you know, who writes in this field, who publishes in it, and so on. All right. Now, one thing to understand is that AIS is a small field, right? Just for the sake of argument, we call it a field. All right, meaning that the amount of researchers actively involved with this is fairly small. All right, let's say a few hundred in the world, right, are doing AIS research, all right, as opposed to a few thousand in the world who are doing, say, capital market research. Right? Now, accounting by itself is not a very large field, right? The American Accounting Association, which is really a sort of global accounting organization. It's not just American, right? Half its members are foreign, right? I think it has 9,000 members or something, all right? Now, in contrast, you know, something like the American Economic Association probably has hundreds of thousands of members, certainly the tens of thousands. So this is a small field that you're getting into, and of that field, AIS is a much smaller field, right? If you're talking about the research active faculty, it's less than 100. Right? The people who you would routinely see writing papers and publishing them and so on, right? You know, sort of leaders in the field. Okay, so this is a fairly small field, all right? And so when you look at these kinds of citation analysis, you will see very familiar names over and over again. People like Steve Sutton, who came last week, or Miklos, or Alex, or whoever. Okay, right? Now I'll talk more about this in a minute. But let's just go through and talk about what they're doing. All right. So now Alex discusses this REA model. Right. Now this is a very complicated model. To be honest, I have never understood the REA model. All right. Okay, I just never have. Right. A couple of weeks ago, I know some chap came here and talked about who came and talked about the REA model. All right. The REA model, well, frankly, there's nothing much I can say about it because I don't really understand what is behind this model, right? But it is an extension of database theory according to Alex, all right? It's a way of describing the world in a sort of formalistic computer science kind of way, all right? And there is a whole group of people who work in this field who have developed a whole literature on REA, all right, to try and describe the world and bring in accounting artifacts like auditing and so on into it, I think, what was they talking about? XBRL or something, right? Big data. He was talking about big data, right? Bring that into this REA framework, right? This is very much a field on its own, right? So people like Guido and Bill McCarthy are heavily involved with it, but they kind of stand alone to some extent, right? You don't see, I mean, they have their own conferences and journals and this and that, right? So it's a little bit separate from what most people would consider to be accounting information systems. But again, I can't say more about that because I don't really understand it. All right? This design science is an interesting approach. This was also actually, I believe, developed by people like Bill McCarthy. All right? And the purpose of this design science is actually quite interesting. It's important to understand why this whole field was developed. Right? The purpose of design science is to say that it's okay to do normative research. Right? And you may have talked about this in your other classes, right? This idea of normative versus positive research. All right? And positive research says, basically it says, why did something happen? Right? Or what happened? Right? So it's past-based. Right? It's looking to the past. And that's what the overwhelming majority of accounting research is. Right? So for example, capital market research is entirely positive, right? Because what it does, it says, well, in 2012, March 31st, IBM released its earnings forecast. What was the reaction in the marketplace? Right? Obviously, you can only do that looking backwards. Okay? And so, over the last 50 years, almost all research has become this, right? Positive, right? In fact, it's not just all research, okay? Many people use the word all legitimate research, meaning if you're doing what's called real, proper, legitimate research, it has to be positive, right? Looking backwards. Now, this is not necessarily, that can be very constraining for people who want to do research on technology, right? Because technology is rapidly moving, okay? And the purpose of technology is after all to change the way things are done, right? Now, that's not to say you can't do positive research in technology. In fact, we'll see examples of that as we go along, right? But much of what people who do AIS want to do is to say, basically, this should happen. All right? The word should is what makes it normative, meaning we should be using technology in auditing. We should use big data in auditing, right? Okay, these are proposals, right? The argument is that the world will be better if you use these technologies. All right, that's what normative research is. Okay, once upon a time, almost all accounting research was normative, right? Because much of it was done by practitioners, and practitioners are not interested in analyzing the past. They want to improve practice in the future, so they would write papers like saying, we should do variance analysis like this. Okay, and in fact, if you go back and look at the Accounting Review or JAWA or something from the 1930s or 40s or 50s, you see lots of papers like that. Where, here's a better way of doing variance analysis.
I had a problem is when you cover some normative research, it's very hard to provide persuasive evidence to say this should happen. So
Well, that's the issue. right? Yes, right? That's why it was considered illegitimate, right? Because the argument was, I say you should do this, somebody else says I don't agree with you, right? Then what do you do, right? So in the absence of any evidence that this proposal is a better thing, it's just a proposal, nothing more, right? So in order to get around that, very objective, this whole idea of design science came about. All right, and what design science says is that they are going to do normative research which says this should happen, but they are going to do it rigorously. All right, and when you did this, no doubt you probably saw various criteria put forward for what makes something a design science based, right? Now, I'm not really convinced by this. To me, this is, in the eye of the beholder. I mean, you are basically saying, here's my criteria to make it legitimate, and I am asserting that I have met them, right? Okay, so I mean, that I find a little bit dubious, but nonetheless, right, there is a very important reason why this design science research came about, okay? Because the argument was that this research cannot help practice too much. There's a limit to what you can do to improve practice if all you say is what happened in the past. Right? And a lot of people in accounting, right, almost everybody I suspect, at some point in their careers starts to ask themselves, why am I doing this? All right? And if all I am doing is simply, endlessly beating data to death, all right, it's sort of, you say this, there's really nothing to be gained from this, right? I mean, I'm not helping change the world. I'm not helping change accounting, never mind the world, right? Practicing accountants don't care about this. Now, there's a lot of argument about that, all right? If you go and talk to people on the SEC or the PCOB, they will cite hundreds and hundreds of papers and say, well, this paper was really interesting to me and so on, right? And maybe it's true, who knows, right? Okay, but if you go and talk to ordinary accounting practitioners, all right, they couldn't care less. I mean, they have never picked up accounting review. You've never crossed their mind to read journal accounting research or whatever. But they would say, look, I can't understand it because I don't understand the methodologies, and I'm not interested in your subject, right? I mean, I'm an auditor. I couldn't care less whether what the earnings response coefficient is to an earnings surprise, right, or something like that, which people focus on. All right, and so a lot of researchers want to do normative research. For example, Bill McCarthy's paper is normative research, right? He's proposing that this RAA model is a better way of describing the world. All right, so to facilitate that kind of research, this idea of design science came about, and it has become a field in its own right. Okay, and what this design science people talk about is the difference between science versus engineering, right? And what they say is, look, if you go to universities, any university, Rutgers, Harvard, whatever, there's science faculties which try and do basic research, fundamental research, but there's also engineering faculties that try to take that technology and apply it, take that science and apply it into a new technology, a better computer programming code, a better way of building a bridge, better concrete, whatever, something real. And that is considered quite legitimate in the field of engineering. Okay? And so if somebody writes and says, look, here is a better way of building a bridge to withstand an earthquake, all right, that is considered legitimate research, right? But it is normative, okay? And if they can do it, you should be able to do it too. All right, that's really the argument for this notion of design science.
Post something, can you theoretically prove that it's good even without? That's what Thresh tried to do in this time. He wanted us to prove something theoretically that's normative. It's not even.
Well, that's a different thing, and that comes down to this idea of internal versus external validity, right? So when you do a mathematical model, you're trying for internal validity, right? Meaning that you develop a theorem that shows that these assumptions will lead to this. Okay? So in a mathematical model, you have to have internal validity, right? You have to prove something. So you can say QED at the end, right? Okay? But what these people are looking at is external validity. Okay, meaning that we capture something that is real in the world. Okay, and so the argument is, if you propose building a bridge that is more likely to withstand an earthquake, well, somebody will go build the bridge, and then you see, right? There's the external validity, right? And after all, people do it, right? When someone proposes that, you develop the math and so on to prove that it probably will work. You can do tests and so on, but eventually the proof is, is done when you actually build the bridge, right? Okay. Now they themselves are clear on this, right? That the first person to propose using this technology to build a better bridge, that's science, right? The second and the third and the fourth person who proposes using the same technology to build a bridge, that's just engineering, that's just consulting. Right? It is not research, right? So they're very clear on this. What they're saying is that the first time somebody uses some research into proposing something new, that is research, right? That's where the design science comes from, right? But if somebody somebody has already proven that this technology leads to a better bridge, then and somebody uses that insight to design another bridge, that's just what work is, right? That's not research. That's just consulting or whatever it is. All right, so they have to be very careful there, right? Because the argument often that people who believe in normative research says is that this is not research, it's consulting. All right, and sometimes it is very hard to draw that distinction. All right, because after all, for example, in the car lab, okay, as far a lot of companies, an Itaú or something comes and gives data and says, we want a better way of monitoring credit cards or something, right? As far as they're concerned, of course, this is consulting, right? They want actual work product, okay? And so the challenge is for the researcher is to be able to extract a research component from what somebody else considers to be a regular work product, right? In other words, it just so happens that they have given this task to somebody at Rutgers Car Lab rather than to one of their own employees. Right? And if they give to one of their own employees, they obviously don't consider it research, right? They consider it just a regular task. Okay, so that's the kind of issues that are being raised in this whole area here. All right, and again, it comes from the fact that AIS tries explicitly, at least many people in AIS, try to be normative rather than positive. All right, that's what makes them go into AIS in the first place. That's what made me go into AIS. Right? This idea that you want your work to have some external validity, meaning that people in the outside world actually care about what you do, right? How much they care, that's a different story. All right, but there is a lot of criticism made of regular, or you might say, standard traditional accounting research that it lacks this. That it's it's now so normative. It's so positive that people in practice don't really care, right? You may be published in JAR, but they could care less when you publish in JAR, right? It just means nothing to them, okay? So that's what they're trying to get at with this, right? So then Hussein, he has this thing on exceptional exceptions, all right? So what he's trying to do there is he's looking at a very specific issue, right, which is in the auditing context, right, when you put in place some system. Now he's talking about technology systems, but it doesn't have to be. It could be a manual system, right, that tests data. Let's say transactions versus a benchmark. Right? And this really is what auditing is all about. Right? Auditing is testing a transaction versus a benchmark. Right? So, do these financial reports correspond to GAAP or to IFRS? IFRS is a benchmark. You're testing this transaction versus that. Right? And so, if that's what auditing is, okay, when you compare these two against each other, you will get what do you call it? Well, let's say we call them violations, right? We will find instances where the data does not correspond to the benchmark. Okay. Now the problem is what happens if you have 2 or 3 of these violations, all right, of course you would rush out as an auditor and examine them and figure out, why, what lessons do we learn from this? Are these just random violations, or are they because somebody has fiddled with the controls to create fraud or something like that? All right. Okay. Now the question is, what happens when you have, say, 10,000 violations? All right. Because if you talk to an auditor, and this was an actual quote from Rod Brennan and Siemens, he said, look, 10,000 violations, I just ignore them all. Right? Because there's nothing I can do. I just do not have the manpower, womanpower, right, to go and examine 10,000 violations, right? I have to complete my audit in 2 weeks or whatever. How can I go and look at 10,000 violations? Okay? And this is a particular problem in continuous auditing. Because now, instead of looking at data once a year, you're looking at it once a second, or once a month, or once a week, more frequently. And so the more frequently you look at data, the more likely you're going to get these violations. All right? And so you end up with enormous numbers of violations, and you have to try and decide, what do you do about this? Okay? Now, this is a great unresolved question. Right? It's an enormously unresolved question. So Hussein has this idea of exceptional exceptions that says, of these 10,000 violations, here's your 10,000, all right? The really important ones are these. All right? Now, that requires 2 things. Okay? First, some explanation for why, if this is say 100, why the other 9,900 aren't that important, all right? And some tool to help you go from 10,000 to 100. Okay? Right now, he proposes doing that. He has some weighting scheme and so on and so forth, right? But if you go and look very closely at it, that weighting scheme that he has came from the company that he was working with. All right, but if you go and ask them why those weights exist, well, they can't take it, right? I mean, there is no real answer to that. All right, much of what the research that takes place at the car lab is this whole area of reducing from 10,000 to 100. Okay, now one way you can do that is by using accounting standards, right? And I believe it's SAS 50, I'm not sure, right? But there is an accounting standard on analytical procedures. And it mentions in the midst of this long standard that you should look at outliers. Okay? Right? Now, define what outlier is, right?
After analysis of exceptional exception, they adjusted their exception still be subjective.
It is, yes. And that's the point. The whole thing is subjective, right? Even this notion here that we should look at outliers. Okay, I was talking to somebody about this only today. Right? The standard says you should only look. It doesn't say you should only look at outliers, right? It says you should look at outliers because they might be of interest, right? But what you should ask is, what is the underlying assumption here? All right, and it is this, right? You say you define these 100 as outliers, right? Because your tool, whatever it is that you had put in place, that tool pulls out 100 for you. You design it to pull out 100, right? Because if it pulls out 9,000, then obviously you gain nothing, right? So you design a tool that takes you from 10,000 to 100, and therefore you define those 100 as outliers. But of course, you have defined them as outliers, right? They are real outliers in some sense. Now you could look at real outliers, meaning you could rank data like this, right? So there was a paper by Alex and somebody, all right, where they looked at the data and said, this data, this is the outlier. This is our little subsample, right? And so on. You could do this, right? But none of these people say or prove that this is where the real problems are. Okay? And nobody has managed to prove this. All right? How do you go from 10,000 to 100? All right? And how do you know that the issues that you are interested in as an auditor, let's say fraud, right? That the fraud exists here and not here, right? Okay, that's very difficult to do, all right? And so the car lab, various tools have done dissertations on a variety of different tools on this, what I might call data reduction, all right? Going from a 10,000 to 100, right? So for example, some people have done cluster analysis, right? Which is a statistical tool, okay? And there's many such tools out there. Again, cluster analysis is one of them, all right? Now this is, strictly speaking, normative research, right? Because what you're saying is that I think if you apply cluster analysis to this, you will end up with this number, and that's what auditors should look at. Okay? Now, of course, it's very hard to prove that. All right? Now, in the real world, what you would like to do is, if you work with a company, right, and they are interested in something, let's say fraud, right? So you apply your cluster analysis or whatever other tool you have in mind to this 10,000, you end up with 100, and then the company goes out there and examines those 100 transactions, and they say, you are right, you found fraud. All right? If you can do that, then you have proven, at least in this one example, that this methodology detects what you're looking for. Now in practice, no company does this, right? They either don't care, right? Or if they do find fraud, they're not going to tell you because of the problems that would cause publicity-wise and legal-wise and so on. So in almost all circumstances, it is extremely difficult to know whether this 100 is really matters. All you can say is, here's a methodology going from 10,000 to 100, right? Whether it's a good methodology or not, nobody knows. All right, so that's a problem, and that is true normative research. You might call it design science, you may not. All right, but nonetheless, it's just should. Okay, and the problem is, how many times can you say it, right? How many times can you say, oh, I think cluster analysis is great, we should use it, right? I mean, there's a limit to how many times you can say this, because after a while, it just, the whole design science rule comes in. The first paper is interesting, the second is less so, and by the fourth or fifth, it's just saying the same thing over and over again, right? Okay, but nonetheless, a lot of work takes place in this area, all right, which is trying to find these exceptional exceptions through a variety of different means. Okay, all right, like Hussein's weighting method, Alex's he uses belief functions, this Dempsey-Schaefer stuff that he talked about and so on, right? But none of them really, as far as I'm concerned, it really proves that it works. If you have any questions, please ask as you go along. Okay, then he has stuff on governmental, right? Now this is a subject area in its own right. All right, so governmental accounting is a subject area. It's its own. But one way of knowing it's a subject area is to do this, right? So let's go look up the. I think I did this in my gap. This. So let's look at this is the American Association. I hope all of you know about this organization, right? All of you should be members of this, right? This is the professional organization for accounting researchers in the same way that the AICPA is a professional body for practicing accountants, right? And there is a special membership category for PhD students. I think it's very cheap or free or something like that, right? Right? You can look this up, right? But I strongly recommend you should join it and become a member. But what I want to show you is this, here, sections and regions. Right? Talking about the regions, it's the sections that are interesting, because the sections tell you what are the subject areas in which people are doing research. All right? So here's accounting. This is behavioral research. It tends to apply political, the sort of underlying theory here is political science, and they're applying that to accounting, right? So here's your accounting information systems, all right? This is more of a practice, don't worry about that, tax association, obviously, that's tax research, auditing, audit research, diversity, again, that's more of a subject area. This is obviously the single largest of all sections, financial accounting and reporting. Right? And this is the brand new journal, the Journal of Financial Reporting. All right, so this is the big enchilada of accounting research. Probably 70–80% of all accounting researchers in the world are in this section. Right? Forensic accounting, that's a narrow field, gender again. So here's your government and non-profit, right? So that is its own field of accounting research. International accounting, that's a field that specializes in looking at cross-national kind of research. Management accounting, another big one. Public interest, and here is the second technology group, right? So for whatever reason, even though we are a very small field, there's two separate sections, right? Almost everybody belongs to both, so it's kind of stupid, right, to have two, but anyway, they have two, right? So both of those are, AIS and ACT are the two technology sections. But as you can see, governmental accounting is one of the established subject areas in accounting research, and this is what Hussein is talking about here, all right? So, though we don't do much of it in Newark, in New Brunswick, I believe it's a big field of research, right? Not research, a big teaching field, right? They're one of the leading teaching schools of governmental accounting. Not many schools anywhere in the world teach governmental accounting, because it's such a small, narrow field. This is the kind of accounting done by people in government, right? State government, federal government, whatever. All right, so they don't use GAAP, they have their own standards and so on. And so the problem is that to teach it, you need researchers, right? Because for accreditation purposes, it has to be taught by PhDs. But this is a really small field of research. Very few people who do governmental research. As you may have noticed, we try to hire somebody with a great difficulty in this field. So Hussein, even though his background is AIS, decided to step into that field and try and do some research there. Okay, and so that's what they would have talked to you about there, right? Some of these papers are trying to apply things like XBRL to the governmental field, right? So that's the purpose of this topic here. Okay, all right. And so then this Kevin, right? He talks about text mining, right? And no doubt he went through this paper, right? And I want to talk to you about that paper too, right? Which is this Lee paper. See here, right? Now, a couple of things to note about that. The most important, of course, is this, right? So this is published in the leading accounting journal. All right. It also uses technology, right? Naive Bayesian machine learning, right? So now I may ask you, how is that possible? Because no doubt you heard that it is very difficult to publish AIS research in leading journals, right? Now, in fact, that is not strictly true, as I will show you. A variety of papers published in all the leading journals, but nonetheless, this paper is very interesting to look at, all right? Because he's doing what Kevin does, right? Which is text mining, which is using technology to suck in all the words written in financial reporting and analyzing it. Okay, and this was not the first paper, right? The first real paper on this was this paper by Lava. Let's see if it's cited here. Maybe it was the same time. Anyway, there was another paper where somebody at Stanford went and did verbal protocol, did this kind of analysis with analyst calls, right? And I think somebody presented a paper on that recently. Anyway, right? But so what this chap does, right? And it's worth just seeing what he does, right? So he looks at the forward-looking statement in corporate filings, meaning 10Ks. Right? I believe he looks at 10Ks. Let's have a look. When you read a paper, read the introduction and then jump to the, skip the literature review and so on initially. What you really want to do is get to here, right? The model or what he's going to do, all right? And so what he does, right, is that he looks at the information content, which is the usual story capital market research, right? You say, here's some signal, and I want to see whether it has affects prices or whatever, right? Okay, and much of what he does is standard stuff, right? Current performance, that's his dependent variable, accruals, the usual stuff you use in capital market research, all right? However, okay, what he's interested in is this tone of MD&As, all right, which is the management disclosure and analysis session, the verbal part of a 10K, of an annual report, right? And he uses this machine learning algorithm to capture tone, all right? So in other words, whether they are positive or negative and so on. Now this is now standard, right? Lots of people do it, a lot of students here are doing this kind of research, but this was the first person to get this published, right? And now what's interesting here is that he's using technology, right? And AIS research has two impacts on accounting research, right? Okay, one of which, as we have seen, is subject area, all right? So one is to say that AIS is the subject area in its own right, such as the application of technology to accounting or auditing or whatever. But the other is that it is the methodology. All right? So you say, if I'm talking about cluster analysis, that makes me AIS. Or if I'm talking about big data analysis, that makes me AIS. All right? Now, this chap could have done two things. He could have done what someone like Kevin does, which is say, I'm using text analysis, right? Okay? And that's a methodology, and therefore I am in AIS. Then he could have done that, right? But he chose not to do that. He said, I am in capital market research. And one of the tools I'm using in capital market research is technology. Okay, and that was really clever of him. That's how he got this published in JAR. Right? Because if he had focused on the technology, if he had said, oh, I'm the first person to use text analysis, right? Okay, and that's a great technology, everybody should use this, right? So they would have said, well, go publish in an AIS journal, right? But he said, look, the technology I'm using is incidental. I'm really a capital markets researcher, but I have come up with this cool new way of bringing in fresh data into capital market research. All right? And that's how we managed to publish in AIS, in Java. This was not by accident. It was a deliberate, chosen strategy on his part. He understood what it would take to publish in Java. And he realized that he would not publish in Java if he focused on the methodology. All right? So the methodology is sort of buried in the paper somewhere. All right? It's written like a traditional capital market paper. Okay? So that's something very important to learn, right? You can publish, if you're going to use AIS as a methodology, you don't necessarily want to emphasize that, all right? You want to emphasize instead what you're applying it to. And if you can apply it to a standard capital market problem, right, that makes it much easier to publish in a traditional accounting journal. Okay? Now, of course, since then, tons of people have used this, right? Today, if you use text mining or if you use verbal protocol analysis, no one thinks you're AIS. There's lots of ordinary capital market researchers, Caroline, Levine or somebody who would never think of themselves as AIS, right? Who would use that simply as a tool, just like they would use regression analysis or panel data or whatever it is, right? To them, it's just another tool in our capital market research. But this chap had the choice, all right? And he chose to say I'm a capital market researcher rather than I'm an AIS researcher.
Like 2 weeks ago, I talked with Dr. Paul Steinberg, and he went with us before, and I said, so our job is to introduce information system technology to the accounting research, and he said that might not be a good strategy for you to publish because the tools are really mature in the IT research. So if we just simply introduce their technology to our like marketing or our accounting field, it will get published very good.
Well, again, that depends on what you want to be known as, right? So Paul wants to be known as, Paul Steinbart is actually now in the information systems department. He's not even in an accounting department, right? So clearly he has chosen to emphasize the technology part of it, right? And so, that's his order. But this fellow has been fabulously successful. He's no longer, he went to, I think, Michigan, but he's no longer in Michigan. He was paid some fantastical amount to go to a university in China. Because he's Chinese, but he was paid, $500,000 or $1 million or something. Apparently, to go to some university in China, and he's making enormous amounts of money, all right, doing consulting and hedge funds and this and that, right? So he really knew where he wanted to go, and off he went. I remember this paper was published only in 2010, right? So he's not like he's some 50-year-old professor, right? His PhD, this is his dissertation. So his PhD was probably 8 years ago or something like that. But now he's this real, world's highest paid accounting professor, so to speak. All right? But anyway, the point I'm making is that AIS, the tools of AIS can be also applied to other fields. And increasingly, something like text mining is, right? So once upon a time, if this fellow was writing, if you chose to do text mining, right, the professor would say, well, I can't advise you, capital market, you better go find some AIS professor, right? Because I don't understand all this technology. Today, it's just a common routine tool in accounting research, capital market research. So sometimes there is a migration of the tools from AIS into traditional accounting, right? And the reason I pointed this out is because Kevin, of course, does this kind of research. Okay, but so here's several papers. Here's this is the paper that I meant, the latter paper. So it's actually later, right? So this was, I think, the first paper that looked at verbal protocol analysis, not looking at written documents like the MD&A, but actually looking at verbal, right, conference calls. I think, didn't somebody present something on conference calls recently? One of the seminars.
I think the accounting PhD.
Did it? Okay, I can't remember. Anyway, somebody did. I have a bad memory, but someone recently talked about this. All right. So Kevin is actually from information systems, right? So his field is not accounting at all, right? He comes in with knowledge of tools, which he then applies to accounting topics, right? So like this, CEO responsive question or whatever, right? And similarly, this lady who we just hired from information systems, right? The one who did a paper on internet marketing or something, right? About what's it called? Yeah, what's it called? Web neutrality, net neutrality. That paper, right? So that lady is also an expert on technology, but she's been hired as an accounting professor. Presumption being that she will use her knowledge of the tools of information systems and apply them to accounting problems, presumably in collaboration with, accounting research of some sort, right? And that's what Kevin is doing effectively. Okay, and so here's another tool that he has developed, this eye tracking research, all right? Okay, this, by the way, has actually been published in accounting, I believe, right? So people are applying this, especially in the experimental field, right? I'm pretty sure that Paul Steinbart mentioned this, that he had eye tracking technology, right? Where you can actually, if you give an experimental, you can actually track the eye and see what data they're looking at and so on. So these are, again, examples of tools. And it wouldn't surprise me if that kind of tool would also cross over, right, from AIS into mainstream accounting research, right? In the same way, in other fields like economics and marketing, now there's a lot of research using MRI machines, all right? You may have heard of this, where they put you in an MRI machine and they give you some stimulus, a marketing campaign or something, and they see which parts of your brain light up, right? Now people are doing that in finance, right? It's becoming kind of a mainstream tool. I don't know if anybody's done that in accounting, because obviously it's incredibly expensive tool to use, but that's an example of a tool that was developed in the sort of technically in the medical field, obviously, and then has crossed over into many other subject areas, right? Like finance. People actually have done, I believe, research in finance looking at how people react mentally to them. Okay? All right. So then Alex goes and talks about machine learning. All right. I have no idea what machine learning is. It's another methodology, right? Right. So you can see here that there's a crossover, right? A lot of the AIS research is methodology based, right? Where it's not subject matter based. It's taking a tool and applying it to some accounting topic, right? And that's how they define themselves as AIS, because their familiarity with a tool like machine learning, okay, or big data, as they talk about later on here. Okay, let me come back to Helen. All right, so here they have this thing on big data and continuous assurance. That's another application of technology. Now what Helen is doing is something completely different, right? Helen is like a queen of this field, auditing. Now auditing is not, you're familiar with continuous auditing, which is the application of technology to auditing. But that's a very narrow subfield. Auditing itself is an enormous field of research, right? It's probably the third largest field of research after financial accounting and management accounting, all right? And so there are people who, there's a whole field, their media meeting has like 450 attendees. So it's huge, right? I mean, there's a lot of researchers in that particular field, right? So what these people do is they apply a variety of tools to study the auditing perspective, right? And in today's world, much of auditing is actually regression based, meaning that they're applying the same tools of capital market research to auditing, right? Another very large field in that is experimental research, right? Where they bring in auditors into some experimental setting and they give them some variation in audit procedure and they see what happens. Right? A lot of people have done dissertations in Rutgers using that, and Helen and Shanta are people who are specialized in doing experimental research. Okay, so that's what she actually does. But since she came to Rutgers, she has been focused a little bit more on the AIS part. All right, I don't know if she herself does research on that, but she mentions a variety of people, right? In particular, of course, these two, Arnold and Sutton, right? Their husband and wife, and Steve Sutton. So the AIS people would have seen him last week, all right? And so they do a lot of this kind of behavioral research, right? Where they do experiments or surveys or field studies and so on, where they go and look at how auditors do things, right? Now, they have this linkage between technology and auditing, right? Or technology and accounting, right? So in the paper that Steve Sutton presented last week in the AIS seminar, they had this web-based tool for bankruptcy, right? And they used that to see how people reacted and so on. And I'll talk more about that in a moment. Okay, all right. Okay, and look, I don't know, let's see what Glenn does. Right? This is Glenn's contribution, is obviously not AIS. It's just presented to you because it's available. All right? And then we have continuous auditing. All right, so continuous auditing is what Rutgers is known for. All right, Miklos is the father of continuous auditing, and this paper, all right, which is this sort of seminal paper in this continuous auditing of online systems, right, says we should be applying technology to auditing, right? Meaning that at the time auditing was entirely manual, people sat down and read ledgers and all that. And he's saying, no, we should be applying technology to parts of the audit process. Now it's important to understand that, this paper you might think is a normative paper, but it's not, right? It is actually a positive paper. Why? Because this is not just a call for technology to be applied to auditing, it is a report on an actual application of technology to auditing, right? So you might say it's actually a form of design science. Right? They developed a system, it ran at AT&T, or Bell Systems at the time, and they report on that to the research. Right? Okay, so it's beyond just an argument for doing it. They're saying here's something that actually worked. Right now, if if you look carefully, it is not auditing, right? It is actually a billing system, right? And the information that is being generated from this system, the CPAS system, is going to managers, not auditors, right? But nonetheless, I mean, he's saying, the same kind of logic could be applied to audit, all right? And since then, there's been a large amount of papers, as you can see, right? Both conceptual and reporting positive research on this field of continuous auditing. And that's what a lot of people are doing here. A lot of students upstairs and so on are doing work in this particular field. Okay? All right. Okay, and big data, that's a new topic, all right? So a lot of what happens in any field, right, is that you look outside this field and you see the latest developments and you bring them in, all right? So the seminal Ball and Brown paper, which you may have come across, right, that paper looked at tools, this kind of capital market research and regression analysis that was being done in finance and applied it to accounting, right? And that's been continuously true, all right? We are a derivative field, meaning our mother fields are other areas like economics or finance or technology or psychology or whatever it is, all right? And so big data is a very big area of research in computer science, right? And so these papers that are cited here, these are not positive papers. Sorry, these are not positive research, it's all normative, right? Every single paper here is normative, meaning they're all saying we should be using big data in auditing. Okay? So far there isn't a positive paper. Nobody has written a paper saying, I use big data in auditing and here's what I found. Right? Nobody's done that here. So every single paper here is normative. Right? Just different aspects of of how they think accounting will change. This is not an accounting paper. This is another paper. That's another normative paper from management. But all the others are just saying, we think we should be using big data in auditing. Okay? And that's fine, So you're bringing in data, you're bringing in an advance from another field and saying we should apply it in auditing here, right? But again, nobody's actually done this here, all right? And there's a lot of discussion about what is big data, will it work in auditing, and so on and so forth, right? And here's another example of that kind of transfer, which is XBRL, right? Extensible business reporting. Now, I don't know, you probably haven't, Juan hasn't given this lecture, right? Or has he? Okay, so this is what I think he's supposed to do today. But anyway, so he'll talk about it next week, I suppose. So XBRL is a version of this. So let's go to our web page. Right, here we are, right? And if we say, look at okay. Here's the HTML, right, of that web page we were just looking at, right? So this is the actual computer code which gives you that web page we saw of the American Accounting Association, right? So here's all the little tags, right, saying this stuff is hidden and this, is whatever, right? So this is written in computer code, all right? And what XBRL does is it uses a form of computer code, not HTML, but what's called XML, right, to tag information in a financial report, right? And why do you do that? So that it's machine readable, like this is, right? This computer code is machine readable because you upload this code to a browser, right? And instead of looking like this, obviously it will look like this, right? So what the XBRL does, it looks at a 10K, right? And underneath it, it will put in background information like a computer code that will identify the numbers in the income statement, like this is sales, this is net profits or whatever. So that's what XBRL stands for, Extensible Business Reporting Language, right? The X stands for extensible, but it also stands for XML, right? Which is the computer code developed by Microsoft, right? So anyway, that's what XBRL is. So what XBRL is talking about is that about 20 years ago, a practitioner, Charlie Hoffman, and Eric Cohen and various other academics and so on also got together and said, look, you know, our accounting information like 10Ks are on paper, right, or PDF at that point. But anyway, PDF is basically paper, right? It's on paper, and so it's very hard to transmit. It's very hard for a computer to read it, right? It would be a lot better if that information was coded like that HTML was, so that a computer could read it and extract data from it. So if I say I want IBM sales from 2014, the computer goes on the web, searches for a tag that says IBM sales 2014 and pulls the data in for you. Okay? So that's what XBRL does. It's now mandated by the United States, by the SEC. All companies report, or big companies anyway, report using XBRL. And there's been an enormous amount of research done on both normative and positive. So at the beginning, there was a lot of normative research saying we should do XBRL will have all these benefits and so on, all right? But now there's also a lot of positive research on what are the implications of XBRL. So now this is actually becoming kind of mainstream. Non-AIS people are doing this research where they're saying, okay, I'm going to look at the effect on the cost of capital of firms that did XBRL. Did it go down or did it go up or whatever, right? So you see that kind of research, and that's what presumably one will talk about next week. Okay, all right. So this is what you can see here, right? Various research on this, all right. Earlier, so there is research here that is actually on XBRL, meaning, for example, right, on the data quality of XBRL files. So there are researchers who actually go and look at the XBRL filings themselves and say, are they done correctly, are there errors, and so on, right? So you might call that kind of meta research on XBRL. But there's also research which is more like capital markets, like this, right? Which is saying, what is the actual effect of XBRL on, the timing of disclosures or the accuracy of disclosures or whatever, all the usual stuff that capital market research does. Okay? Now, one of the things that I noticed, I've done a lot of refereeing of these kinds of papers, right, is that much of that early research on the capital market impact of XBRL was done by AIS faculty. Okay? Now, think about this. These are AIS faculty doing capital market research. All right? And much of that research was terrible. Right? Because a lot of AIS faculty don't know how to do capital market research, right? They've never, it's not like it's their main subject area, all right? They just saw an opportunity of jumping in, all right? And so they didn't really know how to do it properly. Okay, and so that is a danger that has to be avoided, all right? Often, you don't want to be in the kind of situation where you're not the expert on the methodology, because, for example, you are really excited by big data, but you're not a computer scientist, right? So you don't really understand all the ins and outs of big data because you haven't studied the last 10 years in big data, nor are you really an expert on capital market research, but you say, I'm going to combine the two. All right? You don't want to, you want to make sure you're an expert in some one of these at least, right? If you're an expert on none, right, then you're going to end up doing rather shoddy research, right? And frankly, there's a lot of shoddy research out there, all right? In other words, if you're an AIS person and you decide to do capital market research, you better make sure that you know capital market research very well, right? Or either that or have a co-author who is a capital markets expert. So you bring in your technology expertise, and that person brings in their training in how to do a really good capital markets paper, okay? Right? Now, some people can combine both, like that Lee fellow, right? That's why he's famous, because he was able to do both. He was really good at doing that kind of technology research, and he was able to do this. Right? But also it's being in the right place at the right time. If you go back and look at that Lee paper, you will see he did a lot of stuff himself, right? Coding and this and that. Now today, almost anybody can do this research because there's software out there that does this kind of analysis for you, right? So, he really did, it wasn't just PR, he really did make a contribution, meaning at that very early stage, he developed tools. He could have said, I'm going to do something else, and in a couple of years, the software will exist for me to do this, but no, he said, I'm going to jump in and do it right now, so I can be the first. right? You know, so you have to be willing to put in that kind of hard work if you want to get the big rewards. Okay, anyway, so that's what XBRL is going to be on there, all right? So anyway, I just wanted to put what you've done into perspective and try and, you know, when you take a survey course like this, make sure that you think about these kinds of issues, all right? The big picture, okay? Is this normative or is it positive? Is it design science? You know, what is the underlying story behind publishing this particular paper or doing this research? And to sort of help you with that, what I want to do is I want to go through some papers that have been published in the leading accounting journals. All of these papers I'm going to go through have been published in the A journals, all right? And we'll talk about how they were published in the A journals, even though the authors are coming from the AIS field. So let's take a break for a few minutes.